firmed up this morning and are generally holding it. We got Alan Luckman here with us in studio, Chief Market Strategist at BullseyeOption.com. Putting the bulls in bullseye today, Alan.
Well, Friday was a great move if we've been watching and waiting for the markets to tell us. I got a lot of nonsense here.
I like that.
So
I feel like I'm in art
facts.
class.
Right. These are all facts that I like to look at. But it's all about one thing. It's all about price. And that price action on Friday was what you like to see.
What'd you like about it mostly?
So we gapped down. So it was an FO move and a fake out move. And it gapped down, filled in that gap after the first hour. It didn't test that gap. It didn't go any further lower. So then it filled in the gap for the rest of the day. That's a very, very positive sign. That was kind of a little bit of a shakeout capitulation.
First time we got a fake out to the downside instead of a fake out.
Exactly. So, but it wasn't as violent as we've seen in the past. Back in August, we had been in the same situation where the market was down 10%, but it did have a more violent capitulation. This was more subtle, but the way that we're following through today is obviously very, very beneficial.
Yeah,
but I'm all about price.
Okay.
58.25 is the halfway point of this drop from the top in the S&P.
Okay.
And every time in market history we've gotten back half those losses, it's had a V recovery. So that targets 6,800 in the S&P. Which is about 18% above where we are.
How do we go from 58.25 to...
So if we get above 58.25, that's a midpoint of that drop from the top.
Okay, and that's also the election level right there at that gap.
Okay,
yep.
So, but whatever, and all I'm saying is if it gets to that level, then we'll see a complete V recovery.
Okay.
Every time in history that's happened.
You think we get past 58.25, we're going back to the high?
Then we're going back to the high. If we go back to the high, that's a full V. You take that total drop from the top on that old high, 6,800. That's happened every time in history. Look at the charts. So I'm going to be one to say, I'm going to be one to not be the dumb guy. I'm going to not try to be the smart guy and just say that could easily happen again. It's happened every single time.
Every time we recover half the losses.
Right.
I like that stat. Okay. So 58.25. All right. Thanks, Alan. No, I'm just kidding.
So
what else you got?
So what was important about Friday also was the VIX.
I love that stat, by the way.
The VIX the VIX was pivoting around 21. 21 is the halfway point of this December low to this recent high at whatever it was, 29 or so. So what we see is that I talk about constantly when I come on about bullish divergence. The market made new lows but not new highs and implied volatility. That was a sign of a sentiment shift. That was a sign that this downtrend was coming to an end, and we're seeing that bounce. And we're seeing where's the VIX at right now? 18. The VIX was down 10, 12% last week. The market actually was positive on the week, so there was a lot of positives, and obviously you want to see it build, and today is a build up on that.
All right. VIX looking like it's on a return to normal. Average, 16.5, 17, something like that. So if we're going to get back to normal, still got another point and a half at least, maybe two.
Well, we've got a lot of upside potential, obviously, because now, this has been such an orderly sell-off, which is very unique over the last couple of years. But if you look at all the big boys of the Magnificent Seven, you've got Microsoft, Google, Apple, they were down 15, 20%. But, what did they make last quarter? 24 billion, 23 billion, 36 billion. They haven't forgotten how to make money, and so they offer some good value here for all the Mag 7s, and they're just hanging now. Today's action brings us all back to the 200-day moving average. The 200-day moving average was broken in the S&P for the first time in more than a year, and so that's where this loss of confidence is really happening. Nothing's changed, but just this loss of confidence has impacted the market.
Okay, levels that KG was talking to us about as well, like that, some consistency. You're going international though today in your trade.
Well,
for all that, you got me all.
I look all around.
America bulled up.
And I had that list because I knew you were going to give me that. So since February, we've talked TME, we've talked Freeport-McMoRan, we've talked Intel, JD.com,
AI. China trade,
AI when it was at 21, and now it's doing pretty well. Walmart last week, and now it's doing pretty well. So these were all pretty aggressive plays. But again, I use options. I have limited risk. I sleep well at night. So that was the time to be a little bit more aggressive.
You hit a lot of those China trades really well. I'll give you credit for that. So why are you going to Brazil? You just want to go to Rio?
I love, but the Rio trade. Tom and I talked about the Rio trade last week when I was here. I said it's getting pretty close to the Rio trade.
What's the Rio trade?
The Rio trade is when you're a floor guy. It's a myth. I don't think it ever happened. A floor guy would put on 100 lot in S&P and pretend, have the card get lost until the end of the day, get on a flight at O'Hare and go to Rio and then see if...
Rio Brazil, not Rio Suites in Vegas.
No, you're out of the country because you may not be coming back ever again.
Well, if you go to Rio Suites in Vegas, you may not be coming back either.
All right, Vale has a PE of 6. All right, it's been between 8 and 10. It's also got the bullish divergence I look for. It had a January low, and that was 20% ago. So we've been trading between 8 and 10 now for 3 months. So that target's 12. Very simple bottom. It's down 50% from its 2021 top, and it's down 25% since last May. So it's got risk reward. And so there's a lot going here. When it made that low, the volatility was at 32. Whereas previously the volatility had been 45. So that shows how dramatically less the fear was. So looking at a June option, the June $8 call, again, that's near 5-year lows. It's trading around 240.
Okay.
It's $2.15 in the money. So the expiration break even is 25 cents. And you've got 3 months in this June option. So again, to bring up the basketball metaphor here, you put down a lot of money on the weekend?
I put it in other places. I did over the weekend.
See,
but not
I don't
basketball.
gamble. Like, we're probability guys.
Right.
That's the difference.
Yeah.
This is a high probability play.
I'm a Sunday poker tournament type of guy.
But that's probability the way you play, too. So you're just...
As long as you're not on tilt.
I don't know what that means. I don't play. So, but anyway, so I like this. We get up to 12 again, which we were back there, not that long ago, September
last year.
The option about doubles in value. So it's just about probability and about, risk reward and payoff.
All right. I like it. You're playing both sides here. Bullish on stocks, looking for us to at least, try and retest the moving average.
Yes, it'll be very important to see that 200-day moving average by the end of the week. Let's not get too into it. The ups and downs, that's how markets work. But
this is an international trade, though, which has been in vogue more so than U.S. stocks lately.
Right. Brazil has really gotten beaten down. The real was up to 6 to 1. If you ever want to go visit there, that's like free. But I'm also watching the dollar. The dollar's the big catalyst I'm looking for. Yeah, we've had a little bit of a bump, a burp, I would call it, in the dollar today at 104. But, I mean, that drop from 110 all the way straight down to 103 was pretty quick, pretty fast. I could look for it to firm a little bit because I'm going to Italy and I'm going to spend tens and tens of dollars. So I'm going to Italy here this week for spring break.
Ooh, nice.
So I appreciate the little bit dollar. Last time I went, the dollar was at all-time forever highs, and like I said, it was free.
It's a great feeling when you travel at a strong dollar. It really is.
Right, but I want it to weaken for trading.
Okay.
So it's a temporary request. That's all I have.
You've got the vacation hedge. Thanks, Alan Nuttman. Appreciate it. Entertaining indeed. Alan Nuttman, Chief Market Strategist, bullseyeoption.com. All right, good stuff. And speaking of Brazil, a commodity-centric world, we're coming back to commodities next. Equities, by the way, being led by the Russell now, as small caps nearing that 2% threshold.